thoughts on BN versus BAM, or weekly BN and BAM comment or question. Here we go. Thoughts on them. I still like them. I was actually reading a interview with Bruce Flatt last night, who is the CEO of Brookfield, and he was talking about the banking crisis. I believe it was an interview when he was over in India, and basically he was like, the current environment that we're in with higher interest rates and with stock selling off and everything, he's actually more optimistic about the investing environment now than he was a couple of years ago when everything was expensive. And he full on said in the interview that that's not a view that goes with the consensus right now. A lot of people think that investing right now is harder and not as good, but theoretically, when interest rates go up, you're actually going to make more money in the future because you're getting a higher return on almost, well, basically every single investment. So he's more optimistic. He thinks that Brookfield is going to actually produce more returns in the future because of that and how much money they invest. And he was also saying that basically exactly what I said earlier on in the video, where when you have a bank like SVB and these other banks collapse and it creates fear in the market and people are selling things because they're just scared, I mean, you get better deals and there's better investments out there. So he basically said he's optimistic when the rest of everyone, or when the majority of investors are scared. Brookfield actually tends to do better. So we're going to see. Brookfield's stock has not been doing well. I'm very surprised by that. They report here pretty soon. And also Brookfield had some properties go under.
That's the thing I wanted to bring up.
Yeah.
I use the same, I'm not going to re-riff on it. Yeah. For those of you who have been watching, I went through why I don't invest in banks. It was largely around just they're hard to understand. I kind of apply the same mindset to Brookfield a bit. Like I looked at them, one of my best friends, Daniel, he's like super bullish on the stock. So I was like, all right, like I'm going to learn about this one. And like, I don't think it's a good or bad stock. I'm just kind of like on the sidelines of, I am cheering you on. Like I was not able to understand that business, but you do. So yes, they defaulted on some properties. Apparently it's not a bad thing, but maybe you could like walk us through. We see the media headline come through. Daniel Crunk's talking about the stock on YouTube. The next day they default on a property and everyone's like, oh my God, what is happening? Walk us through what happened there.
Yeah, it's that was a funny time. So I made a full video on Brookfield and I was like, I think this is the best stock in the market right now. I think it's the most undervalued stock with the best future opportunity. And then the next day a headline comes out, Brookfield just defaulted on $106 million of real estate. And I was like, well, that doesn't look good. But when you look into the numbers, I mean, Brookfield has a $33 billion real estate portfolio. So $160 million defaulting is it's less than 0.5% of their portfolio. And Brookfield has said that their commercial real estate portfolio is 95% very high quality office real estate, which actually is seeing an increase in demand right now. And their net revenue per property is actually increasing because of how high quality it is and how people want that high quality office space. However, they do have a 5% of their portfolio that's not that good, and they're actually trying to get rid of. That is the portfolio that is seeing defaults right now. And how Brookfield does this is they probably have like thousands of little subsidiaries underneath the company. So this little subsidiary may own an office portfolio of 10 buildings or something like that. I'm just using a generalization, but let's say that they have a subsidiary that owns 10 office properties. If they want that property to just disappear, they don't want to think about it anymore, yeah, they'll just default on the loans and say, you know what, we don't want to pay those loans anymore. The bank can have those properties. I believe that's what they're doing. Because
so in other words, I just think this is a little bit confusing. They have corporate structures that they set up where there is this big, we can think of it as an umbrella organization, which is Brookfield. They are then made up of tons of other different corporate entities, which each have their legal unalienable rights. Maybe I'm just using the word unalienable there. But anyways, so when they default on this, you're saying it's very contained, I guess is another way.
It cannot spread throughout.
So they're management knows this is going to happen. It's not like the CEO woke up one day and was like, holy crap, I thought we had like $20 billion in our bank account. There's only 5. We're not going to be able to make this mortgage payment. Like everything goes on fire. You're saying is a very calculated, sorry, what was the correct word here? They foreclosed or they just missed their payment?
Yeah, they just stopped paying it. Like, the reality is Brookfield just stopped paying it. And here's the
All
thing.
right.
To me, this had to be a choice because Brookfield generated $5.2 billion in cash flow last year. So on a $160 million property complex, your interest payments are probably less than $10 million a year. So it's not like they don't have the cash to do it. So therefore, my conclusion is they chose not to pay those off. And they have this corporate structure so that they can confine risk or mitigate risk. So if something does go wrong in this area of their real estate portfolio, it's very confined to that. So personally, I don't think that their commercial real estate is a problem. Yeah, there's negative headlines going around, but it's like 0.5% of their property. And it's probably the property that they want to get rid of anyway. So I think that these headlines like to spread that around and be like, oh, Brookfield's going under, they just defaulted on $100 million of real estate. Then when you look at the facts and you dig into it, it's like, that company is very solid. It's very okay. It's going to be fine.
All right. Conspiracy theory. There is a Daniel Pronk smear campaign going on by major media. They watched you drop that video. They had that on cue where they're like, all right, he dropped the Brookfield video tomorrow morning. We're ripping headlines out all over negative about Brookfield. No, but I think you explained that pretty well. If anyone else has questions about that in the chat, let us know. Daniel, you mind if I take another question here, or was there anything else you wanted to say on that one?
We'll see. We'll just see what happens. I mean, Brookfield, they're going to report within the next few weeks. The CEO has said he believes the stock is incredibly undervalued right now. I agree with him. And they told the market a few months ago that if their stock remains down like this, then they may do a tender offer, which is essentially like buying back a ton of stock, or that they're just going to start ramping up their stock buybacks. So I'm speculating that in the first quarter, they will announce a stock buyback program. As a shareholder, I want them to, because I think the stock is very cheap and very low right now. So I'm hoping they do. Then I'm hoping that kind of tells the market, what's really going on. Or, if it doesn't and they don't announce anything and the stock remains down, then I'll just continue dollar cost averaging at a lower price, which is also okay.